Ladies and gentlemen, there's a lot of brain power in the studio right now. Kirk Conover and Chuck Malamut. Whew, it's like poof, I saw like static electricity like dancing in the sky. Chuck Malamut is here. This program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. And ladies and gentlemen, Assemblyman Kirk Conover has officially left the building. See you next time, Kirk. Thanks for everything. Good morning, Chuck.
Harry, good morning.
Great to see you. Great to be with you. And we have a lot to talk about this hour.
Tough hour to follow, that's for sure, but we're going to do our best.
Yeah, Kirk was he was on his game.
So in spite of all the sausages being made in Washington, the market just continues to move onward and upward. And it's just been...
Wasn't the latest round driven by the president saying that tax cuts for individuals and corporations will be happening very soon? Isn't that really when this thing took off again?
Well, no, Harry. I think what is happening here is the market is truly looking first and foremost at earnings. Secondly, as these announcements come, from Washington, the market has a tendency to take that news, digest it, very, very quickly, and make decisions, right, wrong, or indifferent. And for the most part, you're right that the announcement that big things will be happening with, in the next couple of weeks with respect to the tax plan, the tax cuts that have been advertised, certainly is helpful. So when you look at the gains that were put in on Friday, followed by the gains that were put in yesterday, and the way it's sort of being put out there, and another day, another record close for the major averages. So,
yesterday was an incredible day.
Right. So as we look at it, at the end of the day, all the indices they backed off from the intraday level highs, but they still had a very, very good day. The Dow yesterday, Harry, was up 0.7%. So you tack that on to year to date, and right now there's about 3.5% year to date. The S&P and the Nasdaq were both up 0.5%. So the Nasdaq right now is up over 7% year to date. And the S&P is up, roughly 4.2%.
Chuck, one thing that's not on our agenda for this morning on the Malamut program, we're going to give Chuck the opportunity to share his market update, which is underway right now. Corporate earnings, which Chuck did touch on, the dollar, geopolitical risks, federal budget deficit, tax reform. One omission, I think we have to give you a moment to talk about it, is that I think markets right now are sort of at a standstill awaiting the testimony of Fed Chair Janet Yellen.
Oh, absolutely. I mean, it's this week, a lot will be focused on what Yellen has to say and how she delivers the message. And the forecasters are predicting, again, anywhere from 2 to 3 potential rate hikes during this over this particular year, 2017. It's a matter of, when and if and to what magnitude. So I think that the markets obviously have built that into the pricing of equities at this point in time. And
how do they build in what they don't know she's going to say?
Well, I think what they've built in is the fact that they're talking, multiple hikes during 2017. Now, if she says something different, then, who knows where the market goes at that point in time. But the fact of the matter is,
well, if she pulled back and actually said that there would not be as many, would that be a negative event for the markets?
Harry, I don't think it'd be a negative event because, here's where we are. Corporate earnings, continue to come in strong. We'll talk about this in a minute. The big concern here, and you and Kirk, touched on a little bit in the last hour, is the fact that where are we with potentially with wage growth?
Right.
And wage growth, is inflationary. And if in fact it happens, then that's not necessarily a good thing, for the markets, because, wage growth increases expenses, which ultimately reduces the EPS, or earnings per share. So I think we're kind of at a push-pull, and, we'll find out very, very soon as to, what Yellen's comments are. In all likelihood, they're looking potentially at a rate hike in March. I mean, don't be at all surprised if she comes in and makes statements to identify that. I mean, she comes twice a year in front of Congress, and this is her semi-annual monetary policy testimony. And I'm curious to see if they drill her and to what extent, because maybe they might be terribly exhausted from everything else.
Yeah. Well, here's what I think.
And might use this as a resting point.
I'll say something that's quasi-political and hold you harmless. She's a Democrat. She'll be glad to raise interest rates on a Republican president that she wouldn't do to a Democrat president. I have every expectation that she's going to telegraph the March rate increase.
Well, I mean, look, I think the last time we were together, there was a 70-some% probability that there will be a hike in March.
How come there was never a rate hike when there could have been, though, before?
I'm sorry, what?
There were several times during the last presidency where they should have raised interest rates, but they didn't.
Well,
and then things did turn where it was like, whoa, kind of glad you didn't, because we didn't see this coming. But I think there is something to what I'm saying.
I don't think, and I think she'll probably say this, that we're certainly not out of the woods, because the economy is not firing on all cylinders. I mean, there are parts of the economy and parts of this country, including where we live, where it's somewhat devastating. I mean, it's you just take a look. I mean, I don't need to tell any of your listeners. I mean, take yourself to Florida, go to California, go to Nevada, go to Texas, go to Boston, Philadelphia. I mean, you're seeing remarkable growth.
It's booming. And
then unfortunately, where we are here, as evidenced, I don't know, Harry, we didn't have a chance to talk. I did have an opportunity to go to the Classic Car Show this weekend at the convention center, and you could feel that it was off. It was off with the number of attendees, with the inventory, with the sponsors, and
spending.
And I'm thinking that, obviously the dollars that were spent, was not necessarily where they wanted it to be. But if you think about that show in previous years, where if you go mid-morning on Saturday, you could not find a parking space. And, we pulled right in and parked right underneath in the garage. And when we left, a few hours later, there was still availability in that garage. So I don't think that's necessarily a good sign for the show. I mean, I don't want to throw cold water on. I mean, they still, it's quite a production, an event, and certainly anyone that is into classic cars in any year per se, I think it's still a good show to attend.
Brief time out. We're going to come back in a few minutes. More Chuck Malamut for all of your financial planning needs. Turn to the exclusive financial advisor to the Hurley in the Morning program, Chuck Malamut. Chuck is in his 26th year here with us on the Hurley in the Morning program, and he's been doing what he does as a financial advisor longer than that. Chuck is the managing director. He leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. You can reach them for all of your financial planning needs at 609-383-2010. The number again for Chuck, 609-383-2010. Chuck will continue his market update, talking corporate earnings, the United States dollar, which is strong, geopolitical risks, federal budget deficit, tax reform, and anything else that crosses Chuck's mind, maybe even gasoline prices, which I understand are supposed to go up from something that I read in the 3 o'clock hour this morning. We continue with Chuck Malamut, 19 minutes past the hour. Did you finish? Because we're jumping around.
We didn't. Let's talk about corporate earnings for a second. Because when we left it last week, and it's somewhat the same. I mean, the season is starting to wind down. Fourth quarter earnings are set to grow anywhere from 8 to 9%, which is pretty remarkable. And that would be, Harry, it would go down in the books as the best performance that we have seen since the third quarter of 2014. So what we continue to see is that a lot of companies are still missing on the top line. However, they're able to get their number on the bottom line, their earnings per share, or their earnings.
But you can't do that forever.
But this has been a long time, and on a go-forward basis, a lot of the forecasting or the predictions that are being made by these respective companies that they think that we hit that earnings trough a year ago. And I was listening as you and Kirk were talking this morning, and Kirk raises a very good point about Intel, staying in the States, building a $7 billion facility and hiring 700 people. So couple that with what is happening now with wage growth is the fact that, can these companies continue to squeeze and reduce their expenses to such a magnitude to continue to get to their numbers? So right now, the equity markets, I think, are pretty well priced to perfection. It's great on the way up. We all, everybody gets very, very giddy. Market makes a new high. Market makes another new high. I think this morning I saw a headline: market sells off, in anticipation to Janet Yellen's conversation today or testimony. It's like I'm saying, well,
how do they know?
But I mean, when you have the reduction was just so very, very insignificant. And don't quote me on this, but I want to say the Dow futures were down less than 50 points.
Yeah.
So, but again, it's sort of the media creating stories that, quite frankly, aren't terribly accurate. So,
when you make the bottom line, but you don't make the top line, you're making the bottom line because you're finding operational efficiencies. Maybe you're laying off staff, cutting back hours, cutting things that you would normally do, maybe even reinvestment into the brand. You're cutting to make the bottom line. I'm a believer that for a short run, and I don't know how long I even mean a short run, but for a period of time, you can do that. But there comes a point where when you stop filling, positions when people leave, and you're burying the people that are left, and they're demoralized and they're exhausted and they can't take vacation and they can never be sick, and they come in when they're sick because they know I can't take off. I'm going to just get crushed. The next day I get back, so I may as well go in when I'm not feeling well. I think you get to a point where not only is that no way to run a company, but there is a point of diminishing return, and I think we're close to it.
Harry, we are starting to see some hiring in some areas, and particularly technology. Unfortunately, in financials, I think it was this morning I read that Credit Suisse missed the number, are now laying off, reducing their workforce by 2,500 people. Mm. So that you will find parts of the economy and parts of sectors of the S&P where there is significant growth, and others that are not. So,
I think the next big move, Chuck, is when the president cuts taxes for individuals and corporations, and then we have a boom like we saw in the 1960s under President Kennedy and the 1980s under President Reagan. I think that's our next boom time, USA, right there. What do you think?
Well, we think that tax reform is going to happen. It's a matter of when you look at it, you're going to have to continue to feed the beast. The government needs desperately the revenue, so they can stay in business, so to speak. Tax reform for individuals and corporations, while it was sent out there last week, and it did take the markets a little bit by surprise, and the markets did move up. Harry, don't be at all surprised if it takes us into next year, 2018. I mean, there are so many initiatives out there, and President Trump is getting, unfortunately, criticized
for moving too fast,
for trying to do too much too quickly.
But I think that is one that I would normally not be surprised that this is something you couldn't get to in the first year and it would go into the second year. I think we're going to see significant tax reform this year. I don't know which quarter, but this year. And then tell us what you think. We've got a few minutes before the bottom of the hour break. Tell us what you think in terms of if you give the American people more money in their paycheck and you give companies incentives and that they're paying less, I say they will hire more. What do you say to the philosophy of what lowering taxes means?
Well, look, we're obviously going to be in a pro-growth era where government should be more of a friend than a foe. Mm-hmm. When you talk about tax reform, as I mentioned just a minute or so ago, the fact of the matter is that let's throw out there that you end up with 3 tax rates as an example, because it's still very, very early in the discussion. How do you increase or leave, or how do you, let me back up. How do you create revenue for the government, because now you have more of a deficit with respect to taxes that are being paid by corporations and individuals? So I think within that tax bill that will happen, there will be multiple exceptions, exemptions, and takeaways where mortgage interest deductibility, charitable contributions. I mean, I don't profess to be an accountant in any way, shape, or form, but
you don't think they're going to take those away?
I think there will. I'm not saying they're going to take those away, but I do think there will be some deductible items that we now have.
Yeah, but if you're just cost shifting or tax shifting, then you're not accomplishing anything. I want to say that that's the old, tried and worn out explanation. Oh no! That's the Democrat argument.
Harry,
what will we do? We're going to have less taxes. But doesn't anybody take into consideration that a healthier economy where people are spending more, you'll have more discretionary spending. Corporations will have more money to reinvest. How about we build into it that why when Kennedy did it and Reagan did it, did we have the greatest expansion in American history at that point, that you get more money?
Harry, I'm right with you.
I know you are.
Okay,
but that's the argument.
But you have to think about,
it's a bad one.
You have to think about, again, that old expression, you're watching sausage being made in Washington, and if you think for a minute it looks ugly now, just fast forward this, as you get into healthcare reform, as you get into tax reform. I mean, we know a couple of things are going to happen, and I'm not saying that this is not going to happen. I'm not the internal pessimist. As you know, we're very optimistic, and I think it's going to work. And I do agree with you that tax cuts are going to be very, very helpful for the economy. But unfortunately, I think you have a lot of people on the other side that will disagree with you. So I don't know how.
And for the reason you said, they look at it as though the government is not going to have enough money. But the idea is it's the people's money to begin with. And if you give the people more of their money, then in the free market, they will put it to work in a way that will be very productive. And then the government will be just fine. Thank you very much.
Yeah, so I think the best way to describe it is if you look at tax reform, it's going to happen. There'll be some legislation that will be passed. I think right now, the details are still, very, very up in the air, somewhat murky.
But they all seem to center around that individuals and corporations will have lower taxes.
Well, yeah, and the other thing that's happening right now, and it's not getting really any attention to speak of, well, a little bit, you talk about that border adjustment tax, which with tax goods that are being imported into our country, it would obviously increase revenue and make broader tax reforms possible. But some politicians look to be a little bit skeptical about the merits. I mean, and Trump has even made some statements about that. So, while the border adjustment tax is important, if it might not end up being part of, Harry, the final GOP plan. We don't know that. But we do expect some sort of tax reform legislation, obviously, to pass.
And the tax reform will be advantageous to individuals and corporations.
Yes, it will be. And
that's the key.
And again, I think it's so early in the process. But remember, what we always talk about, the equity markets. The equity markets on a go-forward basis are always looking ahead, not looking back. And the markets are always, not always, but the markets for the most part are predicting where we're going to be
and hopefully they'll
6
be
months from
looking
now.
at a future that says that the American wage earner will be able to keep more of their money and the job producers will have incentives to create even more jobs. And then that hopefully would be a very attractive forward-looking picture.
Imagine for a moment if we weren't witnessing what we're witnessing right now. If we were able to clearly focus on growing the economy, doing our jobs, and having a more friendly, I guess, government, not to the people, but amongst themselves.
And maybe we can talk about that when we get to your topic of geopolitical risks. When we come back from the bottom of the hour break, which is at hand, we're going to talk about the dollar. We're going to talk about geopolitical risks, the federal budget deficit. Chuck has already talked about tax reform. It's Chuck's weekly program, all about financial matters here on the Hurley in the Morning program. Chuck has been with us for the full length and breadth of the entire history of this program. He's been with us since day one. Chuck is the managing director, leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. To reach Chuck and his team for all of your financial planning needs. That's every financial marker in your lifetime: financial retirement planning, college building, vacation planning, anything that you're looking to do, which is over any period of time. Sit down with Chuck and let him demonstrate to you his competency, his ability in the area of total asset management, coupled with the all-important asset allocation. 609-383-2010 is Chuck's phone number, 609-383-2010. Thank you, great one. 34 minutes past the hour. Chuck Malamut is here. Remember, for all of your financial planning needs, Chuck Malamut is the managing director. He leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. 609-383-2010 for all of your financial planning needs. So what's up with the U.S. dollar, Chuck?
So, Harry,
Is it strong? Is the dollar like doing a muscle?
So we've had somewhat...
I'm posing.
I know,
I'm
but there's nothing there to look
flashing
at.
guns, man, right now for Chuck. And I'm not talking about weapons. I'm talking about...
Maybe
you see that sort of mountain that just... Whoa!
Maybe you ought to wear a tighter shirt then, Harry. Okay, so... Anyway, we've had somewhat of a pullback in the U.S. dollar of late, but we do expect the dollar, to strengthen, throughout the next, year or so. So the dollar has really rallied strongly since the election.
Yep.
But we've taken somewhat of a breather in the last couple of weeks. We could see some additional near-term consolidation. It wouldn't surprise us at all. Some are saying that the U.S. dollar is overbought to a certain degree. However, if we get the growth that you've identified, and the interest rates increase, that's going to probably continue upward pressure on the currency. Now, that's good news and that's bad news. So think about what that does. For our exports. You think about what that does, with the trade imbalance that could potentially increase with a rising dollar. So it's not necessarily all good news.
How about this one? I know you don't talk about any one company, but this is kind of extraordinary, so I'm going to see if you'll make an exception to your policy.
Let me guess.
Apple, you knew where I was going because I love the company and I always have. I don't hold any of it, but I just have always loved the company. And they're going to be valued at $700 billion. Now, Chuck, correct me if I'm wrong. They're going to be at like a record high. I'm confident of that. But somehow, is this being interpreted as bad news? So if you miss your number, it's bad news. If you're worth too much, it's bad news. I mean, what could possibly be bad news about what I just said?
Well, look, Apple had a fantastic quarter. I'm not telling anything that no one already doesn't know. So it doesn't surprise us that Apple, hit, I guess, an all-time high yesterday. But the fact of the matter is, how you think about that stock and what happened to the company 2 years ago. I mean, it got absolutely demolished.
I don't think there's ever – you disagree with me on this point. I can say it as a layperson. I don't think there's ever been a company in history that has been so priced to perfection the way that Apple is.
No, I'm going to totally disagree with you.
You always do.
And the reason for that is look, we are both, and a lot of your listeners are Apple users in one way, shape, or form, whether it's the phone, whether it's the tablet, whether it's the watch. I mean, it could be any of a number of things. But bottom line, like last week, Amazon missed. Okay, so that stock got beat up. You continue to see equities underperform when they don't make their numbers. So, Harry, as much as I love you like a brother, we are going to disagree with that forever because the equity markets, that's their job, is to price equities to perfection. Now, they're not always going to get it right, but they're going to get it more right than wrong.
Maybe it's the sheer size of the company that the disproportionate to sort of reality megaphone that it seems to project and attract could be the difference.
I'll agree with you there
because makes me think that it's treated differently.
You hear about.
Yeah.
Look, you're going to hear more about Apple.
Yeah.
Then you're going to hear about a mid-cap local bank.
That's why I always defer to your expertise, but I'm going to concede the point and probably not bring it up again, even though I've been persistently stubborn on this, because I think you had a breakthrough with me here today where I accept the behemoth size of the company as a reason why there's a disproportionate amount of attention shined on it. And that's understandable. And it really is not – it doesn't conflict with everything that you've always said. The media is interested in what's most interesting. And in many cases, what's most interesting is the item that's the biggest. And this has shown, like you said, through their brand, all the different products that touch every person's daily life, it gets a disproportionate amount of attention because of its sheer size.
Yeah, I mean, so look, if you look at look at the tech sector. Microsoft, Alphabet, or Google, Netflix, and Facebook. They've all hit this year all-time intraday highs.
And also, too, they all get beat up over the years.
Apple up 15% this year as of yesterday's close. NASDAQ was up about 7%. So, there's that whole discussion, which we really haven't talked about, is the foreign cash, bringing that money back, repatriating that money. So
I would love it.
If that happens, Apple, I think, will be the beneficiary of that, along with, a lot of other companies where the money is sitting outside.
We don't know if it's $5 trillion, it's trillions. What would that mean to America if this government said, bring it all back, we're not going to hammer you, you pay fair, you're going to pay a fair amount of tax on that, bring it home, don't hide it anymore, there's no need to hide it anymore. What would $2, $3, $4, $5 trillion mean? Well,
look, I mean, GDP, to move that needle, it's really hard. Certainly moving it, in a positive versus negative direction. I wouldn't be at all surprised if it really pushes GDP, up 1, up 2, from the levels that we are currently seeing.
Yeah, I think so too, and I think that would be big because if we could get to anywhere near 2 or 3, just through new ways of doing business, and you added a point or two on top of that, it would be quite a run if we could get somewhere 3, 4, 5% GDP again, which we used to think as normal. Now what? Great Britain at whatever it is, 2.5. They're the envy of the world right now.
Yeah, so why don't we
post-Brexit, by the way?
Yeah, I know you got that right too. Yes, you didn't. Well, we'll save this for a minute as far as what your wall looks like, but and it's not a wall that's being built. Wall's already being built.
Already built. So and Mexico paid for it.
So let's talk about geopolitical. We're running pretty short on time here, and we've got a few things to get through. Geopolitical risks. I mean, one of our favorite topics. So. It still is out there and being viewed on a not only a day-to-day basis but an hourly basis. I listened to you yesterday. I really used to enjoy watching Saturday Night Live.
Ugh.
But I'm at the point.
It's unwatchable.
I did watch. I will admit to you, I did watch parts of it on YouTube on Sunday, and will no longer watch that show.
It's sad. It was a great franchise. They were funny. Now it's not funny. It's sick.
Yeah. So if you talk about a little bit about geopolitical risks here, investors for the most part remain pretty optimistic with respect to the pro growth Trump era. I mean, his agenda. I mean, it's just, so think about this. We talked about tax reform. We just talked about fiscal stimulus. We talked about regulatory revisions, and we did not chat about today infrastructure spending, which that obviously he wants to do. That's going to all promote economic growth. However, investors are getting they're getting upset. They're getting beaten down. They're a little wary about what his priorities are, because sometimes when he says here's what he's going to do, and this comes first, this comes second, and he's still. And how do you tell somebody to stay off your Twitter?
Right.
How do you stay somebody? Hey, President Trump, you're doing a really great job, but do me a favor, put the phone away. Like it's 6 o'clock. Stay off that phone, because what happens is he has a tendency to lash out at individuals. He lashes out about specific companies with, those companies he disagrees with. So I'm not telling your listeners anything they don't know right now.
Because he is very, very free at, and willing to say certain things, he has moved company stocks up and down. I mean, it's been
he has, and that's not So
I'm not bragging about it.
No,
but
certainly,
I'm just noting it.
Certainly a CEO of a specific company doesn't want to hear about their company getting bashed on a Twitter rant.
Because that goes to 110 million people. Because if you do, if you catch his wrath, then your company is going to take a hit.
It will temporarily. Yeah, I mean, you looked at, it was.
And you can't have a business plan to compete with that, because you're working, like you're talking about, top line, bottom line. You're managing staff. You're managing your plan. And then you have
is that President Trump calling you?
It's actually somebody we both know, but I'm going to protect the innocent. But let me throw this in real quick, and I know you got a couple things you still want to do, and if you stay, we have the time. Kirk Conover wrote to me a while ago, early actually, in our second segment, that repeal of Dodd-Frank will also release capital into the economy, in addition to the tax cuts.
I agree, but here's what's going to happen.
Brother Kirk, I'm with you. I'm with you, babe. Chuck's going to go away from us again.
No.
I'm with you, Kirk.
No. Dodd-Frank and the fiduciary rule.
Yeah.
Okay, which impacts our industry, are on the table. The problem with that, I don't think you're going to be able to abolish Dodd-Frank in its entirety. You will be able to take pieces out, because to abolish it in its entirety, it's going to take a vote. It's not going to be an executive order. So,
but they have the votes.
But we don't know if they have the votes. So it's going to take, if they go and address it and take parts of it out along the way, and you get more of a refined or redefined or a reduced Dodd-Frank, I think that's going to have an immediate impact, to the banks.
That'd be a good start. Take out the worst,
particularly your mid-size and your small capitalization banks. You think about how many people government has employed to be, quote, the watchdog, because the financials did not have the ability to run a business back in 2008. I mean, the pendulum swung, Harry. Yeah. From having 0 people there, well, 0 is not the right number, so 10 people there to now having 100. So I think I agree with Kirk and you, but I don't think Dodd-Frank goes away in its entirety.
I mean, you don't get back to the point where these ninja loans, no income, no job. You can't have that kind of thing.
No, that's not going to happen.
But you could do certain, and I've talked to this with a few people. You could do some of the no doc where somebody has, a great credit history, where somebody has the the ability to put 20 or 25% down. You could relax
Look,
this.
we as you know, we also do liability management.
Yeah.
Including, mortgages, home equity loans, and a lot of specialized lending. It's easier to finance an aircraft purchase than it is to to do a mortgage.
Isn't that amazing? That's amazing to hear that.
Because, and when you think about it, so now you have an item that you are financing that travels. I mean, it's not like buying a car and doing a loan on a car. I mean, these planes can go very quickly.
Yeah.
And kind of, I don't want to say that they're going to disappear, but it just doesn't make any sense.
Yeah, that's pretty wild, actually. That tells you right there something's mixed up, because that should be very difficult to do. There's just a handful of people that are even able to do that kind of transaction.
All right, so the borrower that has the ability to buy an aircraft is certainly a borrower that's different, a different borrower than the person that's going to buy their first home or is stretched.
But to me, it's all relative.
But if you
person that's getting a $150,000 mortgage, and that is like the top that they could even qualify for, they're going to have an $800 a month mortgage, as opposed to the person financing their aircraft. It's all relative.
But I'm saying let me back up for a second. If you take that same borrower that has the ability to buy an aircraft and buy a home, and mortgage the home, it's easier to finance the aircraft than it is the mortgage.
It's crazy. Chuck, you had 6 topics you wanted to cover, and you've done great. You did the market update, you did corporate earnings, you did the U.S. dollar, you did geopolitical risks, you did tax reform. I don't believe you spoke this morning on the federal budget deficit.
No. So unfortunately, Harry, as you know, the budget continues to expand. And that could complicate things as we get into 2017 and 2018. On a rolling 12-month basis, and I know you're going to, the other person is responsible for this, and it's not necessarily President Trump. The deficit rose to $587 billion for fiscal year 2016. It was up from $405 billion from the prior year.
Terrible.
So tax revenues have declined, spending levels have advanced, so the trends will make any tax cuts and spending plans somewhat problematic. So it all goes back to what we kind of talked about before. Is like, where are we with these tax cuts? So we have to be conscious of the budget deficit that we currently have. So I don't think it's necessarily a bad thing, but I think it's something that we need to be very, very concerned about as we get into the next couple of years.
Chuck, I want to leave you just an extra minute because I don't know, just as your brother, I think you just want to just brag about your little brother. Just give you a minute.
Harry, look, so it's 8. This is amazing. It's 8:49
and 43 seconds.
And I'm actually, we go for 45 minutes. So this is on
overtime,
borrowed time.
Yeah.
And I just find it remarkable that I've been here for almost an hour. And immediately to my right are 2 emails that I wrote, one a couple months ago and one actually as of last night, congratulating you with a remarkable performance.
Thank you.
Where you went, let me get them doing this from memory, you went 17-5 during the playoffs, over-unders and actual winners against the point spreads.
Just a sidebar, without Mike Gill, I'd be 18-2. Thank you.
No, 17-5, so you're at 22.
What I'm saying is,
you'd be 18-4?
I would have. No. I'm sorry. I would have had 2 losses. I would have been 20-2.
Oh, okay. It's pretty. So, anyways,
without Mike Gill,
it's 17-5. You're still at like 77%, I think, and I think the number 2 person came in at like 66%.
Yeah, 14-8.
14-8. Okay. But I think what your listeners need to understand is that you won both the regular season and the postseason. That's never been done. We've been doing this 11 years together for entertainment purposes only.
Thank you.
I was a little late this morning. I had an appointment with Mike Rubel, and I tendered your resignation for you, effective this spring. So you will be moving to Vegas and helping set the lines on all these games, since you have such a prowess for understanding NFL football. But in all seriousness, Mike wasn't there, so I left a note for him to call me. So hopefully he will do that later today.
He's very efficient.
He is
at returning calls. Chuck, I want to thank you for the honor and privilege of, for entertainment purposes only, playing this each year for 11 years, and it was probably something that will never happen again. I just feel that way. It's impossible.
Harry, I can't get.
No, I mean for me. No, I'm
oh,
saying
okay,
for me.
all right.
Somebody may do it.
I'm glad you quantified
that.
that.
I meant that. I meant that humbly. It will never happen again for me. Hey, look, in 11 years, it never happened yet for me. So I'm thinking this is just.
What's your old expression? A broken clock is right twice a day.
Twice a day.
There you go.
So you mean I got one more chance?
But I will tell you that unfortunately, as you know, I had a tough time of it this year. My
your process
did not work as well as it should have. But
isn't it fair to say what's very interesting is, as much as we're similar in so many ways, in this particular thing, if I have a good week, almost always you have a bad week. If you have a good week, I have a bad week.
Yeah,
and this is 11 years we've been opposites.
Yeah, I mean, I consider the way I approach that.
You're the contrarian.
The contrarian, yes,
yeah.
and you know that, and I think most people that know me understand that as well. But it's all for fun. It's all for bragging rights. So, Harry, you can leave that email there for at least the next year.
Oh yeah,
probably will stay there forever.
I don't plan to take it down. So, unless somebody rips it down and throws it away, but then I'll hopefully be able to go into my email, because unless you're Hillary Clinton, you can't delete emails. I could find this, any time in the next decade if somebody takes it from me. But I'm very proud. I've had $1 up on the wall and a quarter for over 5 years, and it never comes down.
But the $100 million bill is gone.
The $100 million bill is gone, but the Trump $1 million bill is in my hand, Chuck. Yeah, I can't remember. I got to remember who gave that to me, but I keep it. Chuck's going to put it in his briefcase. I have a Donald Trump $1 million bill, and it really feels like currency. And I keep it in my day timer. I've had it since the very beginning of 2016, I think. Isn't that cool?
Very impressive,
yeah.
Harry. Yes.
Thank you.
Good job. So, listen. Have a great week,
you too,
and I'm looking forward to seeing you again next week.
Look forward to it, too. You've been listening to Chuck Malamut. For all of your financial planning needs, turn to Chuck, the Malamut Group. Chuck is the managing director. They're at Morgan Stanley's Northfield office, 609-383-2010. We'll set the plate for Dr. Bob in just a few minutes. Stay with us. It's Hurley in the morning.